Gold moved higher this Tuesday as more drama comes out of Washington, but could this just be a short-lived surge? Joining us today is Frank Holmes, CEO of U.S. Global Investors. Frank, welcome back.
It's great to be with you.
And you brought with you a big political story of the day. Donald Trump Jr. going to Twitter to release the email chain regarding the Russian meeting. And boy, did it move markets, including gold, which jumped some $8 on the news. Prices are now somewhat back down. So was that just a short-term move here again, Frank?
Well, all those quant funds that follow sentiment and word choice, and the fact that 99% of the media outlets are anti-Trump, naturally that negative news creates uncertainty, and that would create a gold surge. I think more importantly, longer term, is really what are inflationary rates, expectations, are they positive or negative?
Now, Frank, I know we've talked about this in the past, but with the tensions we're seeing, with the uncertainty, do you think that gold's lost its safe haven appeal here?
No, I think a classic is how quickly it surged over the past couple of days off of this news. And I think if something happens horrifically from North Korea, then gold will tack on a couple $100.
All right, Trump news aside now, let's look forward here to Yellen's testimony before Congress starting Wednesday into Thursday. How could gold move on this big market event here, Frank?
Well, it's how she describes raising rates in the next second half of the year and what will be the indicators to be looking at to make a decision to stall or keep raising rates.
So where do you think we could see, gold traded here off that news, Frank? Would it fall below 1,200?
Well, it could if they expect rates to go much greater than I like to look at the 2-year government bond yield, and it's like 1.36. So if rates were to go above that, then you would immediately see gold sell off. Right now, we have positive rates for 10-year government bond, and that started to sell off in gold. And now the 5-year government bond is slightly positive yields, and that's also more pressure on gold on the downside. But the 2-year government bond, which more currencies trade back and forth, it's still very negative.
Okay, but I'm sensing that doesn't concern you because when you speak of gold selling off, you're still confident here.
I'm very confident because they just keep printing money. Europe's on a tear, but money supply grew like 5% last month. And they're buying all these non-performing loans to try to stimulate their economy. And it's working. PMI numbers are strong out of Europe and Germany. I see in our Eastern European fund, it's on a tear. So there's some positive parts to this whole global economic boom.
Another news item I definitely want to get your thoughts on was the LME. More than 2 tons of gold were traded through its new metals contracts on its first day, which launched Monday. What does this new product bring to the precious metals industry here, Frank?
Well, it just validates that gold is the 4th most liquid asset class in the world. And it's just the fact that it has such liquidity so quickly is extremely positive for gold, both as money and as love jewelry.
All right, Frank. And finally, need to ask you, what's that touchdown pass going to be this week? What do you think could really be a game changer here for gold?
It is CPI numbers. They're coming out and everything's moving around positive and negative interest rates. They're coming out Friday.
All right, we'll be watching that, Frank. And thank you for watching. Stay tuned. We're talking Yellen with the Street's Scott Gam up next. Hey!